asking you about the election and its potential impact on the economy and on the markets. What do you tell them?
They absolutely are asking about the election, and what we're telling them is to separate out the economy and the markets from the elections. What will matter?
What does that mean?
Well, yeah, great question. What will matter is the candidates are going to be pro-business or not. And as you were saying earlier, in terms of we want to see candidates who are pro-business. The market likes candidates that are pro-business. And right now we're in the beginning of the election cycle with primaries coming up in the next couple of weeks. We're not seeing all the candidates in the primaries until Super Tuesday. So I think for right now, we don't have too much to worry about or think about until we see a little bit more indication of who that person will be, who the nomination.
I guess it's fairly easy for me to interpret from what you're saying who we're talking about here in terms of pro-business candidates and people who are less pro-business as candidates. So let me turn to Michael and see if you see it the same way. Are your customers, are your clients, is the discussion in your shop about the election and whether a pro or less pro-business candidate might win and what effect that would have on the markets?
Yeah, we are having these discussions a lot. Certainly we don't have a lot of really good history to go on here. Obviously, we've had elections every 4 years, but there's a potential that this year you could have the views of the candidates be quite wide apart in terms of their policy, preferred policies. So it does, I think, add some uncertainty to the environment right now. And, you know, one of the narratives of last year was that trade policy uncertainty was weighing on business investment. I think that could perhaps persist into this year, given that policy uncertainty, albeit of another sort, could be taking the place of trade policy uncertainty.
Michael, I want to challenge you just a little bit. You say there's a little bit of uncertainty. Let's be realistic here. There's a lot of uncertainty whether capitalism is going to get suppressed. And with some of the candidates that are out there that we like to say they're not as pro-business, let's just be more honest and say they're not as much of a capitalist.
You can say that.
Okay. And so at the end of the day, as a business owner myself, I'm thinking about the economy overall, not just the markets. And I'm a strong believer that the absence of capitalism and the presence of whatever the opposite thing is not good for any part of our economy. To say that you're only talking about it a little bit or hearing about it a little bit feels, not that it's disingenuous, but it feels slightly inaccurate.
Well, I'm hearing about it on a daily basis, let's say. And I agree that, you know, a markets-based economy has worked for the U.S., but, you know, we're going to have to see who the nominees are, or certainly the nominee on the Democratic side, before we really decide how much of an impact this is going to be on the outlook. As I said, right now, we do see business capital spending has been weak, but hiring has been strong. So apparently businesses aren't yet viewing this as existential, but something to keep an eye on for this year.
Well, there's a lot that obviously can happen between now and November. And Kathy, certainly the White House feels that if it can keep the economy firing on all cylinders, then voting will go in its favor. I mean, how powerful is this current economy for this current White House?
Well, I wouldn't want to be the one to reflect on the outcome of the political situation. But I would say, in terms of the economy right now, I think the fundamentals are there. The consumer is still in it, and those are things we look at as well. We're not just looking at the markets. The market is a reflection of what's going on in the business and what's underlying in profit margins, earnings, growth, and things like that. And that's what we really look at. In terms of the way that the tax laws were changed in 2017, very favorable to corporations, and other things that have come out of this administration have definitely been favorable for the economy.
And we surely will hear more about that potential middle-class tax cut before the year is out, even if we don't see anything happening in 2020. Michael, I mean, what's your thought on how much that could mean for middle America, and what would that do to the deficit, especially now that we're learning that we're going to be topping $1 trillion?
Right. Our best guess is that given the current political divisions in Washington, it's going to be hard to get a tax cut or really any fiscal action this year. If we did have one, that would obviously be a support to consumer spending growth, as it was after the 2017 tax cut. But it would also, of course, widen the deficit, which, as you know, in the piece you mentioned leading into this, is already around $1 trillion. So it doesn't feel like, I would say at this point, the economy needs more aggregate demand. We really need more investment, and we need the supply side to grow.
Marcus, final word?
I'm concerned about this idea that we have a growing deficit and we're potentially at risk for a capitalistic environment to go away. I don't know how that doesn't make the deficit even worse. We're talking about the GDP having a little slower growth, talking about the deficit growing, and now we're talking about potential candidates that maybe aren't as business friendly, more social program friendly, which cost money.
Whose programs have. I mean, they're going to be very expensive.
Well, if everything's free, it costs money. Somebody's got to pay for it.
Somebody has to pay for it. And so that becomes, at that point, potentially very worrisome for the economy.